Ryan, today we are going to be going through the go-to-market strategy for this startup that is in a pre-seed stage, and they are trying to raise 800K. We've already got some traction going on. They did raise, I
Nice.
believe, 30K, and they have their first client. And this is for everyone who's watching part two. Part one will be available, not as of the time of this recording, but eventually when it gets out. Part one, we went through the pitch deck and we just really looked at how this founder is communicating their value proposition to the investor. And we have some thoughts, generally speaking, and the founder is going to be adjusting their pitch deck. But today, just for everybody watching, I have here with me Ryan Rattan, one of the founders of Startups.com, multi-time founder himself, but the chief marketing officer. And really what we want to do is look at how decks are positioned for investors, specifically for the go-to-market strategy, because the almighty traction is so required. And I think, Ryan, we sound like broken records when we say this, but one more time for everybody who's joining us, how important is traction, especially at an early stage when you're presenting to investors?
Paramount, right? It's what takes it from being pie in the sky. I hope we can do this to here's what we can show you that it will actually give you some confidence to understand we are already doing this, right? It's the difference between being speculation and actual performance, right? And it's hugely important. And look, well, same thing I tell my kids. I'll stop sounding like a broken record the minute everybody starts doing what I'm saying. If we start,
Yeah.
and look, it's not, we're not saying it just because we want to do what we're saying. We're saying it because we know this is what starts to work. This is what drives interest. This is what's driving investment. You and I are both seeing it. Everybody in the market seeing it. Companies that don't have traction are significantly less likely to get funded. Always have been, but in the last couple of years, even more so. And we're starting to see like even what constitutes as traction being dialed up and up and up. Where some investors are like, "Look, I'm going to wait until we see revenue." Some are saying like, "I want to see it break even." Right. So we're talking significant in some cases.
Some founders say to me, we talked about this last time with Will, but Ed, there's so many companies that I'm seeing are raising without any traction, without anything going on, like literally drawings on a napkin. They see all these stories and they think to themselves, well, why can't I be in that top 0.1%? And also founders say, I can't get the traction until I get the investment. And then investors say, it has never been cheaper to develop a product these
Yes.
days. What do you say to those founders who are just in that emotional state of frustration because they can't seem to just get over the hump and they got that chicken and egg scenario?
Aim smaller. You're probably trying to build your dream house when what you can afford to do and really need to do right now is pitch a tent on the land, occupy the space, get out there, do something, start scratching around in the dirt and make stuff happen. All right. The reality is, you said, it's getting cheaper and cheaper and cheaper to build product. We're starting to see now like expectations for what an MVP need to look like are significantly different now. Why? Because you can make it look great with very little money, right? You can do a lot. You can get to a really nice looking prototype with very little cash. If you're talking a digital product, it's physical product, not necessarily, although costs there are starting to plummet too, because we're using AI to do tooling and all kinds of other stuff. It's making that cheaper too.
I talked to a founder yesterday and she was saying, well, if I'm going to build this SaaS the way that I can compete with all these companies out there, then I'm going to have to do this and that, and it's going to require development time. And I just flat out said to her, don't build it. You are describing SaaS like 2 years ago, 3 years ago, those
Yeah.
darlings maybe in the whole frothy environment of 2021. But for everybody, you all have to understand that starting in 2022, especially in 2023, there was a mass extinction event for startups. Billions of dollars of investment were wiped out because of the markets changing, capital getting more expensive, and then suddenly all the oxygen is getting sucked out of the room by this AI. And
Yep.
AI has become the new interface. And I literally walked her through what she should do using simple AI agents. And I said, you could basically set this up like right there using English language to code your app versus Python, JavaScript, Ruby on Rails. It's completely changed. And I think a lot of founders are still in a bit of shock in terms of this transition, Ryan.
I have a feeling I talked to the same founder today. and
Yeah.
and I have a feeling that I gave her very, very similar feedback. I mean, I was saying like, look, you're talking about trying to build an enterprise level SaaS. Like, I'd be really scared if I'm sitting in 2025 thinking what I need to build is enterprise SaaS. I don't know what enterprise SaaS is going to look like the next couple of years, but it's not going to look like a one size fits all behemoth piece of code that works for everybody, because it won't need to anymore. We've only accepted that because that was the alternative. There was no alternative. Rather, we've accepted the massive softwares that are built for the mass market because that's what was available, because it was so expensive to build. You had to build for a bunch of people, and then everybody had to sort of conform to your shape to be able to make it work. You don't have to do that anymore. Everybody's going to be building their own tools. If software doesn't get its head wrapped around that, nobody's going to be buying software anymore. We're all just going to build it for ourselves.
Hence, getting out there and getting that traction is so important.
Yep.
Ryan, we're going to be using this tool. So I already loaded up this founder's pitch deck, and this is our new investor matching. And just wanted to highlight, this is a tool, and you can do everything. Will is so gracious to remind us, you can do everything that we talk about by yourself. We just want to remove the friction for you and build the tool in what I call a righteous value exchange, especially since you can try for free. But the company is Scroll, and we loaded it up and we looked for the investors, and we ended up with some interesting results. And I'm just going to highlight this for a second, Ryan, because the first results that happened had all to do with artificial intelligence, which fits, but then cybersecurity. And there was a mixed message, and I'm just setting up the little mystery here as we're going to super sleuth this. But then I went and looked at different ways to cut this apart and sort the list and focus on human resources, which didn't come out through the pitch deck. So there's a communication issue. I think there's a gap. Let's take a look, and I want to familiarize, and I'll point out where Will kind of had a few issues with the pitch deck. But let's start here. Scroll. It's a professional networking app for Gen Zs with an AI resume fraud detector. What's your immediate reaction to this tagline?
Professional networking app for Gen Zs with AI resume fraud detector. Okay, so I guess then we're assuming that a lot of professional network or are we assuming that this is mostly around job search, since we've bolded AI resume fraud detector? So I take something away from it. Look, I do like a single clear statement that gives us what we do and for whom. I think we could get into some argument around, like, does professional networking app really tell us what it's doing? Is Gen Z's really a market, a narrow enough market? I mean, it's a massive swath of the population. Why AI resume fraud detector? Is that just so we can gratuitously include AI here? Or is that really like a core feature of this? And if it is the core feature of this, am I only networking when I'm seeking job and so forth? So it introduces some questions. I don't know if they're going to be good or bad questions just yet.
The fact of the matter is, as we've demonstrated, it's not clear for you, Ryan. It's not slam dunk. You know what it is right out of the gate.
I do not.
And we always say in these parts, your cover page is the only slide that everybody is going to see. So really make it count. And you're going to see, Ryan, that this deck gets just more convoluted. Here we go. Resume fraud. This is the problem. Costs small and medium enterprises and startups $300 billion annually worldwide due to lack of HR resources and weaker verification structure. Thoroughly verify candidate backgrounds, resulting in bad hires. And we got the sources below. What do you think?
Look, I think that we've kind of gone in a slightly different direction here now. Right? We're talking about a professional networking app. Now I get like that may be the tee up, right? So we're saying like this is what we're building. A little intrigue here around like this is what the problem we're actually solving, and we're going to do that through the guise of a professional networking app. I can still see like how those fit together. So which problem are we tackling here? We tackling fraud, the bad hire aspect. I mean, I know they're all part of the same, or maybe they're systematic or problem endemic of the same issue. But like, all right, let's see here. I'm trying to think of what I would do to start to unwind this. But again, like as an investor, I'd be leaning back a little already.
That's what I want to point out. So let me pause, everyone. Ryan he started off with his advisor hat. He's earnestly trying to help. But then as soon as he said, let me put my investor hat on, it's what called lean back. It's like, what's going on here? And we are replicating what the investors will do. And so founders, all of you out there, never mistake our reaction as advisors that want to sit on your side of the table and help you, as that's what investors going to respond to or how they'll respond. And let me just be straightforward and clear. Investors can be total jerks, appear to be the coldest, most detached people on the planet because they're literally looking at dozens of pitch decks a week. They don't have the time, or they're just very tired and they're in that power dynamic where they don't have to give you the benefit of the doubt or try and figure things out or work with you. They don't have to. So you want to understand that there is a way that you think the investors are going to receive your pitch deck, and there's the actual way, and those can be totally different things.
Yeah, that detached aspect, I think of them as almost like when you go to see a doctor, right? They have to be pragmatic. They have to be quick. They're not going to ask you. So Ryan, before, the morning you got that concussion playing football, what were you thinking? How were you feeling? What were you doing? Like, is there anything we could have done to prevent that? They're just like, hey, you hit your head. It's bad. You shouldn't do that. Don't do that anymore. Right. They just got to get to the point and they got to cut to the chase. Right. They don't have time to dig in and help you fix everything. That's not what the investor's there for. That's what we're here for. We're here to help fix stuff. Investors are there to fix a different kind of problem, which is how do they turn their money? And if it's a VC, their partner's money into more money. That's what they're there for.
That's such a great way of putting it, because I remember I had a doctor once and he had a sign up and it said, we can only listen to one problem per appointment, please. And you had to be very clear on why you were there. You had 15 minutes and you had to you couldn't ramble on. You couldn't compound the issue. And that's how investors act. It's great. Here's the good part about this. At least we know that there's resume fraud. It's affecting SMEs. Now, we can clump this together. That's what Will suggested. And it's costing $300 billion. But the why, that was unclear in terms of, what do you mean lack of HR resources? This is usually the founder knowing in their head what everybody should be thinking, and weaker verification infrastructure. Like, what exactly does that mean? To thoroughly verify candidates, resulting in bad hires. Now, here's the other thing I'm going to point out, Ryan. Fraud, that's a very heavy word, so we need to define what that is. But if you were sort of trying to provide some guidance to this, how could you suggest that this founder clarifies the problem statement?
I think I would want to call some of these things out, right? So fraud, very strong term. And I get, like, we want to use strong language. We want to poke the bear. We want to dial the problem up. We want to make it seem severe, right? But it needs to actually be severe. So
good point.
You may also say that, like, people might not assume, like, okay, well, how much fraud is there actually? We're talking about resume padding, right? I might even go the opposite direction. Sometimes we want to go, like, with the strongest word we can find. But you could presumably, in this 300 billion figure, even things like a little bit of resume padding, right?
Right.
And that's kind of the point. Like, outright fraud, a little easier to spot, right? But if you can say something like, even when we look at things like really lightweight resume padding, even things that light result in these things. Now, I'm not saying I would include that in the copy, but I think that just for sake of argument, let's think about when we're trying to get people to lean into what we're doing. Do we want to say resume fraud, which people might go, okay, well, how much of the time that is that? And that's actually a stat I would love to see here. How often are we talking about this happening, right? It doesn't reference it. It gives us a total dollar number. 10% of resumes are fraudulent, 25% of resumes are fraudulent, 50% of resumes are fraudulent. Or is it 1% of resumes are fraudulent, but it has massive costs each time it happens? Because that starts to help me understand, like, how do we really need to solve this? Is it worth spending time and effort and money to solve a problem that's only 1% of the time?
Let's set this up just so everybody in the audience understands where we're getting to. Ryan, my question to you as a CMO, why is defining the problem so important for a go-to-market strategy, which leads to traction for investors to say, oh, you've de-risked the investment enough, take my money?
Because we have to understand whether the problem matters or not.
Okay.
Right? We have to understand whether the problem matters. We are immediately going to go, we're going to try, and look, we can't always immediately quantify or qualify a problem. We try to, right? That's one of the first things we're going to try to. We're going to hear that problem. We're going to go, do I think this is that big of a problem? Or I'm going to start asking questions of myself. I'm going to start asking questions of the founder to get them to quantify and qualify this thing, right? Because if I don't believe it's a big, severe problem that other people want to solve, right? If it's okay, that's a second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th tier problem, it's going to directly impact the ability for the founder to go and extract money from that market. And if I'm giving them my money to go and try and do that, I want to be as certain as I can beforehand that that's actually going to happen, right? So we really, the problem matters so much, right? We've said this before, but to me, the first couple slides of the pitch deck, should I care? Do I care? Problem, solution, market size, or where I decide if I care about the startup at a financial level. Is this can this at any level work? The rest of the deck is, do I believe you can do it? It starts with a problem.
Fabulous. We had a question in the chat here, and it's a good question. If we can't get true data on the severity of the problem, is it okay if we throw out a guesstimate based on our experience? And let me tell you where I see this, Ryan. I see people say, most people are dissatisfied with their car insurance, right? Like, they'll throw out facts like, in the $57 billion industry, the majority of people have this problem. Ryan, what's your answer to this?
I think there are very few problems that we can't find true data on. And my argument there would be, if we can't find true data on the severity of the problem, are we sure there is any severity to the problem? Right? Severe problems tend to have lots of data around them because they're severe problems. So this might be an indicator that the problem isn't as severe as you think it is, that we need to look around a little bit more and try to understand, is that the problem or is it a symptom, right? Is there a problem behind the problem?
Let me give everyone a pro tip, or the word that you want to use here. If you're in this situation where you're like, I can't find data, and we recognize sometimes it's not easy to just Google or ChatGPT deep research. I tend to find figures out the data behind that. But if you can't find it, it's called extrapolation. All right. I literally tell ChatGPT extrapolate, because investors are okay with you extrapolating a set of data and saying, we think this quantifies the problem. Case in point, Ryan, working with a company, and in their problem statement, they said 48 million people have this problem. I said, how do you know? And they said, well, 48 people struggle with it. I said, how many people actually have the problem that your solution is intended to solve? And they said, we don't know. And I said, okay, we need to extrapolate. So out of those 48 million people, how many take some type of action and then fail? Oh, it's 11 million people. I said, great. Now we're getting closer. Out of those 11 million people, how many have the opportunity? How do we know? Are there surveys? Do we talk about it, etc.? And can we say, if they say 50% of people are dissatisfied, those 11 million people, then your problem is 5.5 million people have it. And that's the extrapolation. Everybody can get to that. I like what Ryan said. If you can't quantify it, you can't tell the investor that this is a problem worth investing in.
You can also go bottom up, right? So if you want to extrapolate, so you've kind of come top down from a large statistic, some available data. Let's say you're having a hard time doing that. You're having a hard time going top to bottom. We can go bottom up, and we can use the same. We can extrapolate and we can project. So we can start with a small data set. Now, we're going to extrapolate from bottom up. I like this to be some sort of primary research. The founder to have gone out and said, we've talked to 100 founders. Of those 100 founders, or whoever we're talking to, 100 of our ICP. Here is what came out of that. Around 60 of them recognize the problem. Around 30 of them are actively trying to solve that.
Ooh, good.
Around 15 of those are dissatisfied with the incumbent solutions for these reasons, and here's what it's costing them on an annual basis. Now we can extrapolate that and we go, okay, so if we extrapolate that to the total market size of this number of this type, whatever the ICP exists in like at the whole number, you can sort of say roughly 15% of the entire population of whatever this population is will be in our early ICP, right? This is great because this not only shows some quantification of the pain and the problem, but it shows that you are going out and having those conversations. You're understanding this from a base level, as opposed to working backward from some large statistic and playing with the numbers.
That is great, Ryan. Bottom up extrapolation, everyone. I like Ryan's technique better. So use it.
It depends. It depends on which one is available.
Yes.
Which one tells a better story. What I always look at, I try to lean back or ask other people, like, does this seem credible at the end? Because if you just sort of take big number and then start applying some reductions to it, do those reductions feel arbitrary? Is there anything that gives us some belief? Another way to look at that, Ed, would be to combine the two approaches and to say, like, look, here's this top level thing that we have some data around. Here's our bottom level analysis. And what's almost always comes out of that is you're going to reduce that top line number somehow, which always adds credibility. Why? Because you're not trying to claim the big number. You're saying that's the big number, but don't get too focused on that because we're not actually going to touch all that. We're going to touch a smaller piece, but it's still damn significant and worth chasing down.
Here's why I love what you just said for the purpose of our conversation. Because if you are on the front lines talking to your ICP and understanding them, then you basically have the foundation for your go-to-market strategy when it comes time.
I'm always telling people, like, a lot of people push back on the customer interviews. They're like, we really think we already understand the problem. It's like, okay, tell me exactly what words all of your ICPs use to describe this. What are the 15 ways that they talk about this? What are the 3 emotions that they feel? And they go, oh, well, we don't know exactly that, but we know the problem. Okay, cool. But if you knew the problem and the language that your ICP uses to describe it and the emotions they feel as they're facing it, or what the emotions they would feel if they could solve it, how much better would you feel? And they're like, well, significantly, right? How much more armed would you be to go out and begin to market? A lot. Okay, great. So why don't we just do that?
Not only that, Ryan, you'll understand whether they'll change their behavior, which we talk about in customer acquisition all the time. For example, I talked to a founder and he said, I'm building this because everybody is pissed off that this happens in the world of software. And I said, great. I can tell you, because we have the advantage of this, Ryan, thousands of founders cross our desks on a regular basis. We know what works, what they're raising money on. And I say to them, I can throw a rock. I have the advantage of this and hitting a dozen founders that have tried to solve what you think is the problem. And they've all come to the same conclusion. People talk about it, but are they willing to actually do something about it when you put a solution in front of them? Crickets. And that's another major challenge with all these options out there.
Yeah. And that's why, like, when we're looking at go-to-market and we're looking for those early adopters, the curve that I always describe to people is the following. Look for people who understand the problem exists, right? If they're not problem aware, don't include them in your market. You're not there yet. The early stages, you're not going to touch people who've never thought they had the problem with a solution that they've never heard of, that you've actually never delivered, right? It's not going to happen. So they need to be problem aware. One, they need to have actively sought solutions for the problem. They need to have actively tried solutions for the problem or be engaged in a solution for the problem right now. Fourth, they need to be dissatisfied with that for a specific reason. Okay.
Ooh, that's a good one.
A specific reason that you intend to change, right? There's something that you're doing, your solution addresses that specific piece, not necessarily only that piece. You can have a ubiquitous solution that does everything everybody else's does, but it has to address that. Otherwise, you're just joining the club. And if they don't have a specific reason that they're still dissatisfied, you're not going to have a specific thing you can pitch to them, be able to attract them to your solution, right? Just saying, well, we're not the ones you're already using doesn't work very well, right? Chevy doesn't market to Ford customers by saying, well, we're not Ford, right? There's a specific thing that they'll do and go do that, right? And that's what you're trying to tap into. So I think that's one of those spots where people really miss in terms of the go-to-market and the early adopter. They miss the fact that it can't just be people making noise about a problem, because sometimes the solution to the problem is complaining about the problem. And that's it. They don't intend to take action. They're just going to keep complaining.
Just to answer the chat, yes, a recording of this will be available on our YouTube channel. While everyone's there, like, comment, subscribe to the YouTube thing. Always helpful.
Do that.
It'll be a couple weeks, but we will get it out there. Ryan, I want to come back to this just for a moment, because
Sure.
What you just said, man, we need to somehow memorialize this, put this on a plaque, and make every founder go through and answer those questions. Because, and I'm looking at our audience, and I'm not calling anybody out specifically, I'm just generalizing that 90% of founders that come to us have a solution looking for a problem.
Yep.
What they do is they say, yeah, I really want to build this. I love my solution. I think it's novel. I'd use it. But then they don't go out and validate it out in the market. And what happens is, when you're trying to raise money, you start slapping every single problem that you can think of onto the slide to go, this will get the investors' attention and they'll fund it. When really, if you would have done what Ryan did, you would have no problems putting in your problem slide exactly what you learn. And when the investors, how do you know this? You basically tell the story of how you got on the front lines, right?
Yeah. You have referenceable data, right? Your own, right? You have the stories behind the data. It's so powerful, because when they start to dig in, do you really want to get into a large scale mathematics debate, right? A stats debate with an investor? No, but they cannot question your primary research. They can dig into it with you, but like, this is what we found. We went out and talked to the people. Anybody can call into question how we are going. Like, that's where we run into trouble, I think, sometimes with the top down numbers, because they can start to call into question. We're like, okay, well, how did you get from 300 to 150? Like, was that an arbitrary 50% cut? You're just saying, like, well, about half the market has this. Well, how many did you talk to derive that?
Right.
Well, we used another statistic, right? And so you start compounding these large stats together, things get pretty inaccurate pretty quick. Whereas if you go bottom up, you're telling a small story, but you're telling a very accurate one.
A wise man once told me, his name rhymes with Ryan Rattan, there are very few problems in marketing you can't solve with a proper customer interview.
That's
right?
Absolutely true.
Let's look at the solution. Scroll uses AI to detect fake or exaggerated resumes. So now they are addressing the questions that you had up at the beginning. It was like, what does this mean, fraud? Instantly helping small to medium enterprises and startups cut hiring time from 44 days to 15 days, saves up to $50K per bad hire. What do you think?
Holy inconsistent statistics and numbers, Batman. Where did 300 million go?
Where here? 300 billion.
Yeah, or 300 billion. Sorry. So look, I actually like I like a bit of what's on the solutions slide better. It was occurring to me as we're looking at the problem slide that one of the things I always like to see is, how do you break this down into what's close to unit economics, right? Yes, I need to see what that big number is, but then I also want to understand, like, when we're talking about this, like, on a per client basis or per user basis, what's the cost to an individual organization? It's 300 billion globally. Then we boil it down. What is it? Is it 50K per bad hire? And now we're also talking about, like, cutting hiring time. It didn't say anything about wasted money from a time perspective. We jump back to that?
It didn't. And it's exactly what Will said. And once again, it's just, we're all sharing the same hive mind. We're all either the same people, or we actually know our stuff, everyone. But Will,
there are some consistent best practices you want to stick to here, and this one's avoiding a few of them.
Yeah, and Will said this is easy. If you just said this is costing these businesses $300 billion a year because there are fake or exaggerated resumes out there that increase the hiring time to 44 days and cost bad hires, and then you went to the solution and just said, we have an AI that will detect fake or exaggerate resumes, reduce the cost of hiring time from 15 days, and reduce the cost of bad hires from 300 billion, like 10%, something like that, down to 10%. That's all you had to do. But throwing all this in, once again, you're throwing up everything against the wall. But Ryan, fundamentally, you understand what the solution is attempting to do.
Yes, I do understand. I do understand. But I think, again, going back to the problem, like, talk about why, right? Like, so there are two things there. So the bad hires, I think we understand. It doesn't attempt to address the time frame one there, but I
Yep.
think it could, right? The
Yep.
time frame thing is pretty simple. You end up interviewing people you don't need to because the resumes were padded, but the proof comes out in the pudding. We start to interview people, then you go like, okay, this person doesn't actually know all the things they said they knew or hasn't done all the things they said they've done in the resume. You end up interviewing people you otherwise wouldn't have. I assume that's how we get from 44 days down to 15.
Right. And Will also said, hey, we want to make sure, and I just pointed out that I'm old and I have problems reading small type, but you just want to put this into the statement up here and just explain what fake or exaggerated resumes are in terms of employment periods, job titles. And you could say this in your problem statement and just say, because of exaggerated details in education, employment, job titles, and descriptions, responsibilities, and just say, we verify all those things, right? And that's all you have to do. Now, this is where it does get a little complicated, Ryan. Let's continue, because what happens is, remember on the cover, the whole Gen Z network, we want to talk about what they're targeting, but I want to get to this first in terms of how it works, because that will affect our target market. Once the hiring manager posts a job, this is where we got confused. Scans beyond basic qualification, our AI automatically matches suitable candidates based on education experience, and then fraud detection. So this slide implied that there is some type of social network, or people are actually posting, Gen Z is posting to a job board, and that's what they use to do fraud detection. So that's where things got a little ambiguous. Are you interpreting the same way, or do you see something that we're not?
Pretty funny, because after our long discussion on those two slides, I forgot that there was supposed to be a social network aspect to this thing.
Yeah. Because initially, Ryan, I thought this was going to be an app where you could just take in your LinkedIn job posting or Indeed or Monster.com and run this against that, but evidently not. Ryan, first, talk about how this lack of clarity affects a go-to-market strategy.
Well, big time, because now I don't know who we need to go market to at first, right? Do we need to go market to Gen Zers to get them on our social network, or do we go directly to hiring managers or HR teams or whoever is going to use the back-end analysis tool? So now I don't know. Is there a marketplace aspect to this, or do the Gen Zs come to us because they want to apply for the jobs? Is there a job? So are the postings anywhere? Do they have to exist within this system? This is sort of trying to tell us how it works. It's giving us a really narrow slice of that.
Yeah, we got a comment in the chat. Or do job seekers use this to make sure they pass fraud detection? We're not too sure yet, but just as Ryan said, now everyone, let's say this is a solution for Gen Z job seekers, as we had in the chat. Then your target market are not small businesses, small and medium enterprises and startups, but let's say it is for those HR departments. Then we're moving the goalposts and it becomes unclear. But Ryan, I want to give you ample time to talk about the go-to-market strategy just a little bit. So I'm going to fast forward a little bit, because we did talk about this with Will, but it looks like we are selling to job seekers as a free thing. So it is some type of posting or some type of service. And then there's a membership for the organizations. But here's the go-to-market. Now, knowing all the ambiguity, trying to piece this together, let's go down the rabbit hole a little bit, Ryan, and try to provide a little bit of guidance, because one, I appreciated the attempt at a go-to-market strategy, because it actually explained, hey, there is a perfectly thoughtful reason that Andy already has clients. This is a founder. Great. So we're going to start there. And then there's this member of the foreign enterprise in Korea. So some type of association partnership is there. And then there's what I appreciated was, okay, now I know you're part of an incubation program, and then we're going to go global. But Ryan, how can we optimize this? What are your thoughts?
Look, this one does something that the last few of these we've looked at doesn't, which it gives us a little bit of the why we are selecting these approaches to go to market, right?
Yes.
So we've got a founder who has direct clients already, and we're going to use that as a beachhead. We already have an existing partnership. So the why is great. Because so often it's the comment that we keep making on these go-to-market slides is you just read like a project management list. We're going to launch Facebook ads, then we're going to do this, then we're going to do this. It doesn't tell me why Facebook makes sense, right? In this case, we're going to start with an in-hand, likely warm population of clients. Now, we may have done this out of order. Were we already on a team slide at some point where we know who Andy is?
No, and you pointed out exactly what Will did as well. Now, let me point out
who Andy is.
One other thing, because this is a theme. If nobody knows who Andy is and there's no context, explain it.
Doesn't
but
matter.
If we go raise 30K, been selected, sign, here's at the bottom here, Ryan, and you bring this up, if you've got something like this, then use that as a foundation. Sign the first client
Yes.
NGO from Hong Kong.
The go-to-market slide is then we're starting with Andy's clients. We've already started with Andy's clients, and we've already booked our first because we saw early appetite there. We're going to continue with that same population. Here's how big they are. Here's how far we expect to get. He's got 200 clients. We've talked to 10. We've signed one. We expect to fully be able to get to 20 clients before we move on to the next, right? Great. Now I totally get what you're doing and why. And I would probably nod my head and go, that makes sense. That sounds sensible. Let's start with the people we've got.
This founder, Andy, has the advantage and benefit of already going out there and selling it. Again, this is the reason we recommend you go out there and do it. Ryan, what about for those founders who are like, well, I don't have all these business clients and I don't have this history of getting these partnerships. What can I do to actually get the same signal to investors that I have? I have what it takes to actually go out and sell this.
We've already done it. If we've listened to the advice we've given so far, we've already done it because we've been out doing customer interviews. And so we're going to be able to say something like, across the 100 customer interviews that we did, the population that showed the most buying intent by saying things like this, and this, led us to believe that they would be the softest market to start with. We've identified 50 of those, and we've already begun calling, and we have calls set, or we've gone out and we've sold one. Like, here's the thing. If you haven't gone out and sold one yet, maybe let's focus more on traction and doing that.
Mm-hmm.
Right. So for all we know, let's just assume Andy was super smart about this. And he was like, should we raise funds? And this is 3 months ago. And they go, well, we don't have any traction yet. Let's go get some traction first. Okay, let's go get it. Now we've got our story. We sold our first client. We've got 199 more possible from my own client roster. Let's do that. If you don't have the client roster, you still have the people out there. And if you're going, well, we can't possibly go and talk to them yet. We haven't raised money. Why? You got to go talk to strangers at some point, folks. Sooner, better than later. You got to do it. Right. So if you don't have Andy's Rolodex, you got the yellow pages, right? You've got to find a way to reach them. You don't want to. Here's the other thing. Like, I find sometimes like, well, we just feel like we'd be able to make a much more sophisticated approach after funding. Cool. I'll bet you can too. Doesn't mean we need a sophisticated approach. Doesn't mean you can afford one. Doesn't mean you'll have the luxury of being able to wait and do that, right? Because you may need an unsophisticated approach to convince people you're worth funding for a sophisticated one.
But Ryan, what if I just admit to you as a founder, I'm scared to go talk to people face to face. I don't think I'm ready. Maybe I got imposter syndrome. And I'm being told, Ryan, by everybody that I can hack my way and find a cool, scalable approach by using social media or vibe marketing. What if I just admit that to you? What do you say? How do you help me?
Then go do the hack it together and do some vibe marketing. Let's see what happens. Right? Cool. Like, I'm fine with that. That's absolutely. If you believe that's a good channel to go with, and there's some validation around that, and people are telling you actually have some sense. A lot of times the other thing you'll hear is that I'm getting a lot of advice. Like, people are just telling me I should go raise funding. People are just telling me, like, it's be like, I always ask them, like, how many of those people offered you a check versus just advice to go raise funds? Are they qualified to tell you to go raise funds if they don't have funds to give you? My answer is almost always probably not.
It's the same way armchair founders give me advice all the time on fundraising. And I ask them, how many VC checks have you raised? And then it's like, well, I don't have all the experience with VCs and et cetera. So it's important to understand
all the experience with VCs. You're missing the most important one, having gotten a check from anybody, right? Hey, whatever the other experiences you can have with a VC are, like really nice partner lunches or, a heated call, cool. But if you've gotten the check, that's the one that we're most interested in.
Investors say right now, and I'm pointing this out for all of you who are building AI, not my opinion, not just my opinion. I share the opinion, but a GP managing partner of an early stage fund that invests in AI has gone on record saying it is so easy to create a demo using AI. We don't want to see demos anymore. What we want to see is that a customer is using it, and we want to know how you got that customer and what they're saying about it. That's where the conversation starts. Not necessarily revenue, but if you can't get it into the hands of one person, you will not cut through the noise of the sea of people saying, I can build this solution. I have what it takes.
Yeah. Again, this is traction, right? It's traction. This is what takes you out of the category of I have an idea to I'm actually doing something about it. And I don't just have an idea. I have an idea that people want. I have an idea that people are aligning themselves with. I have an idea that makes people change their behaviors and try something new. That's super powerful.
And this founder is at least showing those signals in terms of they got their first customer and they've got these organizations willing to partner with them. Ryan, how would you change this slide just to be much more effective? Let's go back and give some guidance to this founder.
Yeah. So I guess there is a little bit of kind of like vagueness around like what are the Andy's beachhead clients like thing. It'd be nice to know a little bit more about those. Like, are those all firmly in a single category, like an ICP? Like, are we going to be able to then go from there and expand out in concentric circles? or are they going to be very different than later adopters? One of the concerns there being like, will we actually be able to reach more people after that, right? So this is one of those things we always wonder about as an investor. Like, once you've exhausted your personal Rolodex, do you have what it takes to go out and find more people? Right? So it's great to start with that, but will you have that ability? The partnership one, being a member of something versus a partnership is very different.
Good point.
Right? So
Very good
I
point.
want to understand what being a member of foreign enterprises in Korea. Okay, I see how many members it has. Great, but like, what does that actually mean?
And
right?
Does this give you an unfair advantage, a hack, a unique insight, a channel?
Right.
We don't know.
Are they reachable? Right. I can be a member of AARP. Doesn't mean I can talk to every other retiree or have some sort of different access to them. I'm not a member of AARP yet. A couple more years. So I think that it's important to understand, like, what is the weight of these things, right? And does this make us sound like we have a good plan and there's a reason for this? So I'm missing the why here. I understand the why with Andy's clients very clearly. I do not understand the why with the partnership in Korea based on this foreign enterprises in Korea, right? And if they're foreign enterprises, why is it important that we're starting in Korea? And maybe there could be a very good reason here, Ed. Could be, if you're a foreign enterprise operating in Korea, you are more susceptible to resume fraud because you can't sniff it out, because you don't know these businesses they've worked for. You don't know culturally where people pad or cheat or extend, right? They could be inventing companies that don't even exist, or roles that don't even exist, or whatever.
This is where internal reality, external perception, they're not matching up based on Ryan's questions. And I happen to know some of the answers to this. And let's extrapolate or start to expand, put words in the founder's mouth, and, look at potential of this slide without it necessarily being true. But if we said, okay, Andy, he is in Korea, right? So I have a certain fondness in my heart for him because he's in Korea, make the connection. But he's operating out of Korea. So if we explain why he has all these contacts in Korea, let's just say he's got 200 contacts that he's been doing business with right now that make the lowest lying fruit because he's located in Korea. And then let's say partnership with this organization, we become a preferred vendor, and we're going to be able to present to all those 1,000 members in Korea who are experiencing this problem. From there, we've been accepted into this incubation program, and they're going to start introducing us to their startups in their incubation program that have this problem. So if you just added just a line of context, this would make so much more sense.
I also would like to know, like I said, they've done a good job with the why. We haven't really talked about the how at all, right? The how is important here, right? So if it's Andy's Rolodex, we call them. Great. I know why, because it's Andy's Rolodex, and I know how we're going to call them. Or we already have regular meetings with them, and we just introduce the solution there. They're already talking to us about the problem. We're just going to introduce it there. Great. When we get to this partnership with foreign enterprises in Korea, I want to understand how we reach these. Also, if there's a connection, so you pointed out Andy's in Korea, so we're starting with Andy's Korean clients. Now we're going to extend to a broader population still in Korea. Is there any overlap between those two? Right. So is it the case that Andy's 200 clients, 100 of them are actually part of this same foreign enterprises in Korea?
Good.
And that will lead to a strong ability to provide referrals because they're part of this same network. So we can say 100 of our members are already doing this. Now I know more about the why. And so again, like, explaining why each of these individually, and ideally explaining why one is a great on-ramp to the next, and that we are logically and sequentially moving from one to the next.
Let me point out something to append to what Ryan said. By doing that, Andy communicates to the investor, this is what I am able to do unique to me, not a laundry list of, we're just going to join this association and that's our go-to-market strategy.
Right.
Andy is
because
explaining.
If anybody can join the association, there's no defensibility. There's nothing unique about that, right? It's like saying we're going to use Facebook marketing. Everyone has the right to use Facebook marketing. It's not a differentiator. It's not going to necessarily make me go, good. Yeah, maybe it is the right answer, but like, if there is some reason, there's a deeper reason behind this, put it out there.
Andy, if you can make that connection and say, this is how we lily pad our way and there's crossover, and I have that unique insight, investors are going to be much happier. Brian, I want to end with this question here from the chat. Appreciate all of you asking the questions. If you're out on the YouTubes, just leave a comment. We'll try to answer it as well. What if you have one ICP who's the buyer and the other ICP who has the pain point? This happens so many times. So someone is holding the purse strings, makes the buying decision, yet someone else has that pain point. What do you do in terms of your interviews? How do you approach that?
It's tough because what we actually have to look for is the problem that the purse string holder cares about solving.
Yes.
In some cases, there are things you can do. Right? So let's talk about the various strategies here. The one is to find out why that creates pain for the purse string holder, right? So why does pain at the economic buyer level matter based on the more like the direct sufferer of the pain? If we can't find that, then can we create enough groundswell at the level of pain where it's so the line worker complaining up to the shift supervisor, right?
Exactly. Yep.
Can enough pressure be created that we can enforce a need to solve this problem, right? So sometimes the indirect pain can become direct pain when we start hearing about the pain all the time, right? If your kids are coming to you and going, there's no milk in the fridge, there's no milk in the fridge, there's no milk in the fridge, at some point you're probably going to buy milk, whether you want to drink milk or not. Let's just pretend I'm horribly lactose intolerant. I will never drink milk. I don't even want the stuff in the house. But if my kids complain enough, I may decide to soothe the pain of hearing them complain by buying them the milk.
Hang
so we
on.
have to understand whether there will ever be an ability to directly attach pain to the economic buyer or not.
It's the same thing back in the day, Dropbox and Box. Instead of trying to go through the accountants and the people spending the money, they actually made it for free for individuals, and individual workers literally took Box into their workplace. That let's start using this as like a novel tool, and then the managers heard about it, and that's how they really scaled an enterprise.
Yeah, I mean, it helps that it is a sharing tool, right?
Yeah.
So that it literally creates the behavior that will spread through an organization. Slack was very similar, right? They didn't try to go after organization top down. They started with small teams, typically on the engineering side, and then it would permeate out, because not only were you targeting a small team, which makes it easier to say yes, it is by nature a shared tool. You were putting it into the hands of the very people who will ultimately influence what tech decisions are made within a company.
So to answer this question, Ryan, you would interview both groups or approach it a different way?
Yep. You have to interview both groups. You got to talk to both and understand, again, so we talk about this a lot. If you're talking to the economic buyer, you cannot just talk to the economic buyer about this particular problem and how they face it. You have to understand their global set of problems and then where this particular problem fits. Because if it turns out that, yes, they recognize this as a problem, or they don't, that's important. But if they recognize it as a problem, but it's like, it's so far down on their list of issues, right? It's my whole silly thing that I talk about, where I walk into your house with a pipe wrench because you've got a leaky faucet, but you also have a roof on fire. So you tell me to get out of the way so the fire department can come in, right? You don't need my wrench and the leaky faucet fixed because there are so many more glaring and painful problems. So we have to understand that, right? And so then it's a matter of, can we then recontextualize the thing that we're doing in the face of, right? I can give an example of that. I know we're running short of time, but I think suffice it to say, you've got to get out there, understand the problem sets that both populations suffer from, and then try to find a way to, if you can't, again, you can't find a direct reason for the economic buyer to want to buy your solution, you have to use that back pressure from the pain sufferers and contextualize it as much as you can to a problem that economic buyer does care about.
Let me give you a 30-second example, and then you can throw yours in.
Sure.
If it works. We had an ed tech solution, and it was for HR, people working in HR, directors and staff. The HR people loved it because we interviewed them, listened to the problem, what they wanted, but we couldn't sell it until we went to the CEO, and we learned that their problem was they were frustrated with their HR departments that they weren't strategic partners to them. And we said, we can solve that problem for you. The CEOs said, great, buy it, approve the HR company, HR departments to hire our company to sell the solution, and everybody was happy. That was one example I used to what you just said.
I think that's perfect. Yeah, my example would illustrate nearly the same thing. So we're good there.
Okay, Ryan, what is your last word of encouragement based on everything that we talked about? Appreciate you as always. Lead us out. Let's end this with a bang.
Look, I'm always going to lean back on some of the same principles, right? It starts with traction, and it starts with traction. Don't tell me what you're going to do until you've told me what you've already done. That makes me believe that you can also accomplish what you say you're going to go out and do, right? Prove that you've got small capabilities, and then show me how that stacks up into bigger and bigger outcomes. Great. If you just start with the big picture and you never show me the pathway that gets there, and you don't show me any demonstrable evidence, I have a harder time buying into that story. Make sure that we're including not just the what's, because the what's become pretty obvious, right? The what you're going to go do. Okay, we're going to use Facebook. We're going to do this. We're going to do that. Give me the why, right? The what is a lot less important than the underlying mechanics and reasoning behind exactly what will happen and why that is the choice, right? That gives me so much more confidence as an investor when I can understand down to that, like, again, unit economics type level. I don't need to know how you're going to reach 50,000 people. If you can show me how you reach one, mechanically, we can agree that that is a good approach. We can extrapolate that out to 50,000 at some point.